Al Pickett, the founder of the Blackprint, the new rules for winning finance, freedom, and flexibility, where I teach people to trade and profit from the markets on a consistent basis. I've been trading for 8 years and I started coaching people a little over 4 years ago to do this. And essentially, what I teach people is how the markets actually work from a very, very objective standpoint, and then how to approach it psychologically the right way, and then have the right risk management to profit on a consistent basis. And the reason I'm doing this video is because it's a bit frustrating to see so many opinions about everything that's going on now in finance, right? So we're talking about Bitcoin, we're talking about Litecoin, and every other cryptocurrency, um, forex, whether it's stocks, commodities, et cetera, et cetera. And what I really want to do, and the goal of this, is to just provide an objective foundation for how to approach the markets, and just really enlighten people on and show you that the markets all work the same way. There are the nuances of the different platforms that you can trade on, but whether you're trading Bitcoin or investing in Bitcoin or forex or stocks or whatever it is, they all have this one thing in common, a couple of things in common, and I'm just going to share that with you, and I hope it's just really, really helpful to you. Um, this is my website. It's alpickett.com, ALPICKETT, and there's some videos and content on here that has a little bit more information and things things you can learn from, etc. And I'm going to get started and just talk about the things that all these financial instruments have in common, and that's the price. And so that's a very, very objective thing, and versus subjective. I think it's going to do this. I think it's going to do this, or I think this company is going to do this, or the world's going to do this, or this government's going to do this. You have to really find that objective thing that they all have in common, and it's price. And just by looking at the price, you can really tell what you need to be doing in the markets without trying to take in all of this information that's out there in the world, and all of these, I'm going to call it what it is, subjective opinions. These are just opinions about what something might do. And when you start to look at the price, then you're looking at something very, very objective. And the example that I always give people is, from week to week, you pass the gas station, and you think about, okay, well, gas prices are going up from last week and from the week before, and you're not thinking about the economy. You're not thinking about, what's going on in the White House or whatever the case. You really just, what it boils down to is you're thinking about what the price is. And so you have noticed that the price is rising. And that is a very objective thing, because we can go back 2 weeks ago, 3 weeks ago, 10 years ago, and find out exactly what the price was at that time for that period. And that's a very defined data point that you can use to tell when a market is, trending up or trending down, when you should be buying and when you should be selling. And so the first thing that I want to do is just really, I'm going to use Facebook as an example. This website that I'm on is freestockcharts.com. And you can set up a free account there to look at any stock that you want to look at, some commodities, gold, silver, that kind of thing. And so what you see here, for some, this may be a lot, this may be foreign, what you see, the green and the red, but these are called candlesticks. And I've got another video that's more detailed about understanding candlesticks that you'll have access to as well. But ultimately, what these candlesticks represent, it's a Japanese technique, or Japanese. It was developed by Japanese that allows you to see what the price is doing. And so today is December 15th. This is Facebook, and the price right now is $179.83 at the time we're speaking. And you can see it moving up a little bit. And you'll also notice the corresponding candlestick, like this one all the way to the right. This is the current candlestick. And each one of these candlesticks represents past price action, right? So this is just how the price has been going up and down, up and down, and up and down. And so with that, that's just very objective information. And over here on the right side, you obviously see what the price was at a period of time. But this represents where it is here and now, right now, and this candlestick is the current one. So that being said, so this is giving you like raw data of what the price is doing. And with that data, I'm going to give you some additional things to allow you to make decisions, very objective decisions versus I think it's going to do this, I think it's going to do this, I heard it's going to do this. You're just going to have a better foundation. And that's my objective in doing this video. So the first thing I want to do before we talk about that and we come back to this is I want to show you that all the markets have a pattern. This is the pattern. So this is an uptrend. This represents an uptrend. This represents a downtrend. And so when a market has a probability of going higher, when it's in an uptrend, this is what it looks like. The price will go up a little bit, it'll come down a little bit, and then it'll take off. The price, when it's in a downtrend, it'll go down, come up, and then continue down. And so the thing I want you to understand there and why this is so important, this was a game changer for me. Really big game changer in understanding that there was a pattern. The majority of the world thinks that they gotta have that. We have this buy low, sell high. That's the thing. Well, higher can always become higher. So a market that's trending up can always go higher, and that's the point that this makes. That up came down a little bit and it kept going. And you're gonna see some live examples of this in just a second. And the other point, the big point, is that lower can always become lower. So saying that you're going to buy low and sell high is not necessarily, there's a time and a place for that, but in terms of the way that markets work and the patterns that they have, you have to be very careful. And that's where risk management comes into place. That's where psychology comes into place. And obviously we won't have time to talk about all of those different things. That's also just more of a coaching thing that has to be done. But this is the pattern that I want you to remember. And after seeing this video, you will not be able to unsee this on any investment or financial instruments that you look at. This platform that I'm looking at right now, this is the MetaTrader platform used by most currency traders, so spot forex, and that's predominantly where I spend my time. And so this is the platform that I have drawn this on, just so you have that information and you know. And now I'm going to go back over to Facebook stock and remember that pattern now. And what I want to do is show you, where is that? Here it is. I just want you to see this pattern playing out over and over. Right? So you have the up part, you have the down part. Don't show me that again. And then you have the up part, right? And then you have the down part. And now it's taking off again, right? Uh-oh. Put that over there. And now it's taking off again. And so this is very, very consistent across all the financial instruments. Bitcoin, stocks, regular, fiat currencies like British pound, euros, US dollar, etc., etc. I can pull up any chart and show you this pattern over and over and over. This one's a little funky. This is Snapchat. I don't know what they've got going on over here. Let me see. I'm just changing the time frame. So this is a longer time frame. So this is, like I said, this is Snapchat, and you can see this pattern. This is a kind of each one of these candlesticks, which you'll learn more about, and you should, represents 1 hour of time. And this is the current one. This is the current price at $15.88. And so you see this pattern playing out over and over again. And it's not going to be clean. It's going to be, different variations of what that pattern looks like, but it's going to play out over and over again. And so this is something that changed my life and changed my trading, from the guessing to just reacting to what the market is doing and not predicting what the market is going to do, strictly reacting off of some objective information. And this is going to allow you to to flourish in all the things that you do going forward. So I definitely want to show you that pattern. And then the next piece really is understanding moving averages. So something very, very simple. Let me see here. Something very, very simple. These are simple tools that the pros use to get in and out of the market and know when the market is trending. And we're just going to add a moving average, and I'm going to explain it first. So this is a moving average, and I have another video that I'll share with you on moving averages as well. So the moving averages essentially smoothing out the price action. So you got all these data points. Say you had data points for the past 5 years or the past 10 years or the past 3 days. What a moving average is basically a line that smoothens out that price data. And let's see here, price history. And so what I just applied here is what's called a 50-day moving average. Simple 50-day moving average. And so this is the 50 is something that a lot of the professionals use to figure out if a market is trending. And you can see just the price has been going up, right? And you can see this line just going right up with it, and that just smoothens out the data. And you'll often find that the price, and you'll see going forward that how the price respects this moving average. It'll come down, touch it, and take off. And usually at different points when it starts to, this is an easy way for you to tell when something is trending up and trending down, right? And you'll find that the price will come down to it and bounce off of it, and it'll respect it, and that pattern will stay intact. And so this line is an easy way for you to just look at it and say, okay, it's in an uptrend. As long as it's above this line, it's in an uptrend. That's very key. Very, very key. And so make sure you have that as a note. And now what I'm going to do is, because there's been more talk about Bitcoin and Litecoin and Ethereum and all of the cryptocurrencies, I'm just going to go over to Bittrex. This is one of the exchanges, one of the cryptocurrency exchanges that allows you to trade different currencies, different cryptocurrencies. So right now I have it on the Bitcoin, and you can see over here 17,580 is kind of the price right now. And what I want to do now is show you, I'm just making this chart a little smaller, and you can see this pattern over and over and over. Up, down, down a little bit, up. What's going to happen next is just a matter of how should we react to what happens next. And something that's more in detail, these are the time frames, which basically in the candlestick video that I'll share with you all is going to explain these different time frames. And so this current price action represents, this candle represents 30 minutes. So each one of these represents 30 minutes of time, 30 minutes of time, 30 minutes of time, 30 minutes of time, etc., etc. All of that this is going to require you to do some additional studying, but it's going to be a great base for you to understand more. Now what I'm going to do with Bitcoin is I'm going to apply the 50 moving average and simple, and all of this is already set on the platform, so you won't have to go in and do anything but type in 50, or it's already going to be on 50 on most of these platforms. So you see how the candle gets above. So really the question is, let me say this, really the question is, okay, when should I get in? When is a good time for me to get in objectively? I'm a very, very objective person. I understand the technology behind cryptocurrencies, which is blockchain and smart contracts. But when it comes to making money in the markets, I'm very, very objective. I just want to know what the price is doing. And what that's going to allow you to do, I just want to know if the price is trending up or trending down. And what that's going to allow you to do is remove a lot of the subjectivity, remove a lot of the noise that you're going to see on Facebook, on Twitter, on Instagram, on the news, in the newspaper, all of those different things. And so that's really what this is all about, and what I'm hoping that this video does for a lot of people is just remove that noise as much as possible. So when the price, this is just one instance, when the price went above the moving average here, and there's all kinds of things about open and closes, which you'll learn more, but the market started to trend. You see how it respects it, came down and touched it, came down and touched it, came close to it, and it just keeps going up. And you don't have to think about what's going to happen next. So when do you buy right here? Ideally, what you want to wait for is for it to go below this moving average and then come back across to give you a fresh opportunity, if you hadn't gotten in over here. And I think we can go back. I can go back much further. There was a bit of what we call consolidation. What day was this? Like, this was a fresh entry on 12/10, like 5 days ago, where the price was 14,000. And based on what I'm telling you, had you gotten in at that point, then you could have just rolled it up. And if you wanted to hold it for, if you're one of those people who want to hold it for the rest of your life, or whatever the case, from 14,000 to 17,000, what's that? 10, 15, 10% would be almost 10. That's 20. Yeah, so 20, a little over 20%, somewhere in that range. In the last 5 days. So that's just using something very simple, something very measurable, something very objective. And there's more to this than just buying at that point. You also want to do some research on risk management and understand your own psychology behind investing and trading. Let's see here. What I want to do now is, let's just pull up, I think Litecoin is on fire. So let's pull up Litecoin. Okay, now let me just put that here. 50 moving average. Create, and here we are. Today it closed above here, and boom, it just kept going up, right? And even when it was, let's go out a little bit here. All right, so let's look at a stronger period of, the last time was 12/10, right? Or a couple of times. So this is not, let me say this too, it's not going to be fail proof. There are going to be times where it goes above and closes back down, and that's where that risk management piece comes in. How much should you be risking? You definitely shouldn't be risking at all. You should just be risking what you can afford to lose. And more importantly, for each trade or investment time, position that you put on, there should be a cap on how much you're willing to lose on that. And so that's where you want to do some more research on risk management, that kind of thing. But here's a period where on like the other, like Bitcoin, where it closed at 12/10, closed above that red line on 12/10 at $140. If you look all the way, or 140, yeah, this is based in dollars, so $140, and then boom, it rocketed up to what was the high here? 324, and that was in 2 days. So here's a big takeaway here. The big takeaway is this: I didn't have to try to buy at the basement. I didn't have to say, oh, I'm gonna buy here because it's low, and that's a subjective thing, because remember, lower can always become lower. I bought when things started to trend up, or you want to buy when things start to trend up again, right? And that's going to put you in a better situation, where it's already trending, it's already starting to move. Do you want to stay? But I guess here's an analogy. You got 5 trains at the station, they're all standing still, and they're all leaving at different times. You want to catch the one that's leaving first, right? And so this is a way to find out which one is going to be leaving first. Is once it closes above there, then and it starts going north, that's when you want to be in the market. Other than that, it's a very subjective thing, right? This is a very objective way to get in on a consistent basis, and that's really what I want to share with you all. And let me say this is applicable to any cryptocurrency. This is applicable to any Any financial instrument. If I decide tomorrow I want to trade sugar and cocoa for the rest of my life, I can do that using these simple processes. Um, forex, stocks, you name it, it's all applicable. You do your own research. You can go back and kind of test this on your own, and I think it'll be very helpful. So anyway, I hope this was very, very helpful for you all. I am open for questions. Once again, this is my website, alpickett.com. There's more to this than there are three core things. So you've got to have a methodology, you got to have the right psychology, and you have to have the right risk management to put yourself on to consistently profit from the markets. Anybody can get lucky a couple times. I mean, that just is what it is. But to do this on a consistent basis for the rest of your life, you got to have those three things in check. So feel free to ask questions. I'm also going to make available on my YouTube page. Well, it's on my I'm going to put. I decided I'm going to put this on my YouTube page, and from there you'll be able to watch the moving average videos and the candlestick videos and ask any questions that you have by reaching out. Anyway, happy Friday, and take care. Share with a friend.